Good morning, ladies and gentlemen, and welcome to the show. Today is the 6th of January, 2020. Thank you guys for tuning in. And, there's an awful lot going on in the world right now, especially around the Persian Gulf. That's a really intensely hot area. What are they doing today over there? In around Iraq and Iran. Let's find out. Well, let's get the charts open up right here. The other day I pointed out something to you guys in the satellite imagery. I pointed out an anomaly, and I said it looked like a fire twister in Australia. Well, that's exactly what it was, and here's a close-up. Boy, I'm always amazed by those things. That's what it is, a fire twister. Really something, eh? My heart goes out to the people in Australia. Not just one region of Australia is burning, but everywhere in Australia is burning right now. They're having a terrible time down under, in the land down under. But let's focus our attention. Let's take a look at what's going on over in the Middle East right now. And evidently, what we have going on is a funeral. It says huge crowds pack Tehran for the commander's funeral. And this is from BBC News, So they're having their funeral right now. We're going to have to wait and see what happens in the next up and coming days. But it's having a tremendous effect on the price of commodities. Let's take a look now today at the silver price. And we can see this effect that it's having. We're looking at a silver price that's up 28 cents on the day. $18.38 for silver. Okay, so here's what we got going on. We're holding these gains we've made in gold and silver. Now at this point, we made a sudden sharp gain when the markets opened up, and we're now holding these gains in gold and silver. Let's take a look at gold. $15.72, $20.30 up. I'm going to tell you something. An awful lot of people don't know this, but there's an awful lot more gold out there in inventories than there is silver. A lot of people don't know that. It's because we're consuming silver. We're using silver up. Silver's an industrial metal. And so the inventories of gold, what do we actually use gold for? Other than a store of value, what do we actually use it for? There's not as many uses for gold as there is for silver. And, silver is going to be one of those commodities. In the future, it's going to get harder and harder to get it out of the ground and get it processed. It's going to cost more and more. I see silver as, if you're looking as a comparison between gold and silver, silver is the one. Silver is going to make bigger gains, I think, in the future. Looking out a few years into the future than gold. But they're both going to do phenomenally well, both of them. Let's take a look now at cryptocurrencies. Cryptocurrencies catching a bid. It's been very hard for cryptocurrencies over the past few weeks to get above that $200 billion market cap. It's been a very big struggle. It's above it now. $203.4 billion for the industry. 67.7% Bitcoin dominance. And what we're looking at is $75.92 for Bitcoin. That's the price today. Ethereum's $141.60. XRP is 21.2 cents. Bitcoin Cash is $237. Litecoin is $44.71. EOS is $2.79. Binance Coin is $14.66. Bitcoin SV is $116.70. And Stellar is 4.8 cents. And Monero is $55.36. So we're looking at all these coins moving up today, along with gold and silver. But that's what I'd expect to happen. When troubles come to the world, that's what we're going to see happen in these commodities, all the commodities, including oil. Let's take a look at the Dow today and see what the Dow's doing. 135 points down. What they're doing is they're now pricing in the events that are happening in the Middle East is being priced into the market. And I think we're pretty much got it priced in now with the falls that we've had. You got to consider on the other end of this spectrum, you've got the Fed pumping tremendous amounts of liquidity into the market in the form of quantitative easing that's not really quantitative easing. They're not buying out to the long end of the yield curve. They're buying the short end. So it's quantitative easing, but according to them, it's not really quantitative easing. But it actually is quantitative easing. I know you guys are getting confused, But what they're doing is they're buying T-bills on the short end of the yield curve. And in real quantitative easing, they buy out in the longer end of the yield curve, longer maturity. And so they're not doing that yet, but I see them going back to real quantitative easing pretty soon because they're going to have to do that to keep supporting these markets. Once you start with quantitative easing, once you start with loose monetary policy, you have to continue because if you stop, the whole thing collapses. This is the way it is. Let's take a look now at crude oil. It's up 62 cents on the day. Now, crude oil is pretty much priced this in. If we see further action, then we will see a higher movement in crude oil. We'll see a higher movement in gold and silver. What's happened is the markets have priced this in now. And it's awaiting further action. If the situation calms down over in the Middle East, then we'll see these prices of oil come back down a little bit. We'll see gold and silver come back down a little bit, and we'll see the market start to go back up a little bit. See? Because they've priced it in now. If we see further action over there, if it settles down. If we see further action over there, then we could see these prices move even higher, more of what we've seen happen. Let's take a look now at U.S. Treasuries. And we're seeing the long end of the yield curve falling and the short end rising. This is moving us back toward our yield curve inversion that we had a few months ago. And if this action continues, like if we get a number of days of this continuing action, we're going to have the yield curve manifest itself again in a big way. But we're going to have to wait and see. This is the kind of action we had that caused the yield curve inversion. The action we're seeing today in the U.S. Treasuries. Let's take a look at the U.S. dollar index. 96.71. The dollar fell briefly, and now it's starting to rise back up slowly again. 96.71 on the U.S. dollar index. The dollar actually should be an awful lot weaker than what it actually is right now. But the reason why it's not is because of what it's being compared against. The euro is the biggest part of the U.S. dollar index, and if we see a lot of strength in the euro, then we'll see the dollar index fall, because it's being compared mostly against the euro. You're comparing garbage against garbage, basically. Okay. Listen, thank you guys for listening to this market report. Like and subscribe. Give me a thumbs up. Really appreciate my viewers out there. Going to try to keep you up to date on this developing story over in the Middle East, which I think could have a tremendous effect upon the oil price, depending on which way this goes. Just not exactly sure yet which way this is going to go. From the very start, I thought that it would possibly calm down, at least for a while, but we've seen this situation. It's been developing for a long time, going back months and months. It's been developing, slowly developing situation in the Middle East. Thank you guys for listening, and we'll catch you guys later. Bye-bye.